Patience is key because you want to be available for the right opportunity. If it doesn't look exactly how you want it, you're better off just avoiding it because there's always going to be another trade that's clearer later. So whether you get the data and the knowledge now or you wait on the experiences when they're presented, but there's no reason to take losses on hypotheticals. We have a pretty solid strategy that we use and we look for. If we don't get it, we don't trade. Ain't nothing wrong with that. Keeps the money alive. So if they want an elongated nuke perspective, they could use this as a first high and give us another high and then go further into that retracement before ever trying to even sell it off. Or they keep using this market level base, providing that liquidity, and then they'll grab one of these highs to shoot from. Depends on what kind of market characteristics we're in. I was just trading prior to the open of this, and volatility is a night and day difference. So I'll attempt the buys at 245s, but if we get shot down hard, then 238s would have to be stops. Otherwise, we shouldn't get filled at all, and we should keep dumping. 15-second, where's that at? All right, boom. So we're filled there, and then stops got to go in. Unfortunately, right there. And then first TP is 257. Banger, lock it in. We'll scalp it because I don't know how much of a run we get, but that was a nice run. Try the sell side breakout here at 22171, assuming that if it does break the level, it's trying to get the next leg up. Otherwise, we shouldn't get filled at all, and we should trickle our way down to the trend line, inverted wise. So that would be like up. We actually have a smaller version of that line of symmetry as well. Didn't go for the short, so definitely doing the correction as we spoke of. So they use that opportunity on the base to get the guys out of the easy pickings of the downtrend. It's just too obvious that this would be a short entry for it to then take the new low like they did here. It's literally the same picture, but they couldn't do it twice in a row. So they usually like to stop those guys out, which allows the liquidity for people to give off and take 224. So we'll see what this line of symmetry does for us here. So we got the candle to run under it. We got the candle to tap. Technically, we can still do buys, but the sell-off can be pretty steep. So we'll keep the stop super light, but it tapped twice on those candles. So it needs to either give a very, very fast impulsive run for us to do this correction, or it's going to come back and wick us out of that trade. And we can always get back in. Small loss. I'm going to put buys in. Okay, never mind. We're in for buys again. Tried to see if we'll get this breakout. We don't want to give too much money away in the range, but we also don't want this thing running back above the trend line. So it might have just grabbed us as a stop and then continue the run, but we'll see. Technically, we should have a bigger stop for this, but we're trying to be strict. Considering the way this market's been selling off, we don't want to be caught in none of that garbage. So either give us the run or take us out. And then there's an imbalance here that could get in the way of our price target. So just be careful. Consider 212 as a area to mitigate risk. We can tap that. We're basing under this trend line, which isn't good. That means we can get an easy full sweep retest and then recover for another sell-off. Not a bad attempt. So we close back in again, which would mean that this guy should look a lot better. That was our area for the shorts position. But we closed some nice candles on that line of symmetry. So definitely worth that shot. But I think we have double the confirmations of shorts here, and here's the base. So any retests on that would be sick. I'll try it for that buys. Again, I really don't like the idea of trying to buy the downside, but we'll put her in and then try to use this lowest price point as a stop of 161. They did liquidate the top like we said here. So usually they'll use a low, liquidate it, get to that top, liquidate it, and if they use that, then they can get through the base. If they can't get through the base, then that means they can't go lower. So that means they need a higher price than these two pieces, which means we can at least get 191, which would be up here. That would be most ideal. 191 is new price, by the way. So you can see, for example, here, this is an order block. and they pushed into it plenty of times. Looks like they're doing a full close of it. And then this is the next price point. That's why we were aiming for it. So we can see that we're falling off just before 191. So they would definitely need to come down and take this low or this low. So it looks like they're going to come and grab us out of here now. Stop losses are in a good spot, but if they want them, they definitely will come get them in the next two candles. So just be careful. There's a lot of sell pressure from the way they're not wanting us to make a new high. They just liquidated this new high by an ounce and sent us flying down. So a lot of reasonings they're trying to use to get a new low on this stuff. Here's the same level that they're supposed to sell off from right now. Looks like we'll fail off and probably push a new low narrative. Yeah, there's the new low there. Let's see if that gives us an actual low to touch. So buy side definitely gave its best shot at trying to give us new price, but they used a new order block that was made and their own high. A lot of reasonings why it could have tried new lows, as we're seeing now. But at least we were able to move up those stop losses really nicely. So the risk definitely was lower and lower as trades articulated. And then there's the new low of 148. Technically, that's our highest time frame price target. And that was us swapping the stop losses that we had earlier by just doubling up, put the stops and then put the sells at the same time. There's an imbalance, which is in front of our stop loss. So if that doesn't do its job, then stop us out. And we'll get a whole nother retracement experience. They've been doing this move smaller and smaller. You can see this one here. And then that one turned into another small version here. And then that guy turned into a smaller one here. So same, getting another experience of that. Just keep pushing slower and slower for the legs up. About 900 bones. So recovered a bit of those stop losses from the bullish experience. We got to trail that pretty nice. So, all right, so we reached low, tapping. We have a lot of consolidation here. It'd be a pretty wicky kind of market because it can choose to really liquidate down to these green levels, or we can get that pop. Truly interested in the shorts. VIX seemed to just increase by an entire percent since the market has opened. So shorts are looking pretty advantageous, but I'm not trying to get liquidated and grabbed. I think I'll short if we go under 189, expecting like an actual dump through. Otherwise, we should see the price try to hold this trend line and keep running higher. So I'll put a sell stop in at 189, see if we get that shoot down. And then just in case, we'll put buy stops up there in case price action wants to be crazy. So it slapped us in, can easily take us out. Where's the market? 930 highs. So it would be this level here. So let's see that. We want to see this actually hold under this trend line. And this is our level that we want to use as the base. So anything above that, bit risky. It'd be cool if we can get an average above that, but we don't know if that flicks back up to our 4-hour order block we had drawn out earlier. It's looking like we're retesting those levels there. Can't seem to get above the trend line. So either we get a fat green rocket that just comes up and runs to 193, or we keep doing this little die down action till we get that 168. So don't go throwing your whole life savings on this trade right now. It really was failing to fall lower here. I'm down to again swap over the buy side if we get 198 to hold. So we can see full sweep and close. Usually above that, we start thinking about the buy side to tap the trend line up here. Okay, so we got the retests. We need to see this market push down and close. Otherwise, we're just going to get stopped out. So if you'd like to mitigate your risk, you can just close it out and wait until we face downwards to buy in again. This black level is what we want to see. So if we get any reasons to get in and get under, Sounds solid. Otherwise, we should probably focus on the buy side now. It's looking pretty good for the buy side, missing all of these levels on the lows. We can try to see if we catch this guy. A trend line would be cool as well to get that breakout. Otherwise, they're going to keep flinging down and grab us out. They just tried it once, so a good chance that they're going to try to run it down if they don't break through this level with some momentum right now. Keeping it light because if we get the breakout, pretty solid to get up here. So that's about like $100 for a $300 reward, or $1,000 for 3 if we're talking 10 comms. But we're really failing to break this high as week. So 1 minute wick down twice. If this next 1 minute candle can't run it, then let's get out of that trade. All right, yep, we're out of there. Still one contract till we catch a banger. You can see the trend line in real time. This yellow experience here closed under it, retest. So we should be pushing back to the red. If we don't, then they should correct above the yellow and get some direction. And that'll at least put us in a breakout trade. That's following the trend parameters at least. Pretty solid line of symmetry here as well. But we'll see if the sell side's really locked in based off of what it does to the 78 level here, if we can even get there. But ideally, that would be nice because the further it comes back, the more profit it will make for us to get to there. Just retested the yellow line there. This is where we need an actual close above it and run. Otherwise, it's just a retest to come right back to 78, which we don't want. But nice break, 300 in the bags. We could potentially see another base here and reach into this triangle, but our entries are pretty solid. So as long as we don't get any crazy kickbacks to the level, then should keep dying off the way that we have been this entire time. Run, base, run. We don't really want this to break back under that yellow line because then that means that could do the same interaction all the way to the red line. So the lowest point of price, we just touched some candle bodies actually, but here's the lowest wick, which is that one green line that we're aiming for targets. And then this one here is the interactions, I think on the 1 or the 4 hour. Yeah, 1 hour lows as well. I'm going to go back to the 15 and then go back to the invert scale. And our stop losses should go at break even now. We do not want to see that come back under the yellow line because if it does, then we're going for the buy side. Not really a model per se, but worth it just to put some money on the table. Let's increase our stops to 131. Lock in $200 if it comes back for the stops. Otherwise, we should be in for at least a $600 trade. So we'll see how it treats this level, come flying back under the yellow line or not. Our stops are right here at this 130 wick. So boom, just grabbed, and this could recover above the yellow line now, which we don't want to see. If it sweeps it, then we'll just get in sells again. We definitely took a lot of small losses considering the one contracts that we've tried here, tried there, giving away 100, 200s. But not too shabby, kept it light when we were supposed to and sized in when we were supposed to. That's really what it's about. Hey man, that's a nuke based recovery right there. Straight to 235. Breaking retest line of symmetries. This thing always happens to us where we'll watch it, can't go low a few times, and then just get this rocket that takes place. I think I'll slap a buy order up here in case we do break above the level, and I'll get filled for like a 215 run. Otherwise, we won't be able to get above the level, so we should just continue falling lower. Just slapped us in for a buy position there. We're in for the breakout. I'll put 209 stops. I don't really want to see it come back down. It should be a straight shot to like 227. Dang, it touched the trend line. I don't know if that comes send us flying down or not. We wanted to hold that base. It didn't quite touch the levels we wanted, but it did touch the trend line up here. So it's enough juice to get us stopped out at least. Technically, based off of this, it grabbed all the highs here and it's under the base again. So we're supposed to see it fall. And if we fall and get under this black line here, that is the session line of symmetry. So that will really put us in bearish sentiment if we get back down there. Otherwise, everything up here should still be relatively based on seeing higher prices. So the trend itself overall is a uptrend. So a lot of these lows can be used to deliver new highs, but this is just the start of the market. So all we can see is this high as a reference, this low as a reference, which means this is a lower high. So anything here can potentially still kick a lower low down. So what we want to do is watch the sentiment of the candles. When they have opportunities to drop, do they? This is an opportunity for it to break this low. And if it breaks that low, we should be seeing it retest those trend lines to find opportunities to go lower as well. If we don't get that, then obviously it doesn't want to fall, which could potentially put us on the buy side to see those levels that we were targeting earlier. So we reclaimed back above this level. You can see barely touched it, getting back above and holding the interactions, which means we could potentially get that break to run, which gives us one of those trend lines that look like this. We have one dip, two dips, and then it could hold it and try to blast for the next level. I'm down to try the buys above the wick there, see if we do get that blast off. If not, we shouldn't see above that wick. We should try to hit lower from here. So there's that wick. This could potentially be the same trade we just took in the beginning, where we get that break impulse, and then comes right back down for stops, but we'll see how it works out. This will be our second attempt at trying the bullish breakouts. You can keep the stops pretty tight on it as well, because like either it runs or it's just not going to run. So this candle body low here at like 194 is pretty chill. You probably only lose like $80. So we are getting some three highs potentials, right? You got one, you got two, and you might get your third to come soon if we sweep down and go for another run. So ideally we want that retest to hold and give us a real good impulse. If not, stop out. So that's why we didn't size into anything in particular, because like the run is there, but still no real continuation. So unless we get another blast above that level, we should definitely take more. If not, just take us out of this trade. I'll move stops up to the wick here, let it wick us out, because right now we need this candle to actually correct very aggressively. And there's that correction that we're looking for. So we can bring it up to the candle bodies itself. I would add here, but we're just not in this position right now. So it's not my favorite looking trade. But now our risk is super small and the reward is pretty decent. We could potentially see the hourly high from this point. That would be 22227, assuming all that stuff stacks for some buying volatility. Can't marry it yet. It can always come back down, grab whatever it wants, still make it to the highs, but keep an open mind and manage your risk. If you need to lock in for the gains that you may have lost in the first trade, like send it, just wait for the next opportunity. And we got three highs. We know what that means. Usually after that third high in succession, we get that short that comes in to stop everyone out. And the base looks like it's here. And that is literally on the dot for our stop loss. Looks like we ran out of momentum and more than likely going to have to pick up some buys in the lower area here. That's our three highs there, right? And then that is that base. Pretty nice though. Two nukes that played out straight up from the open. And then we're doing the same all over again. So we know this pattern, close above, retest. We should be seeing it fail this trend line to move for the next leg down on the sell side. Otherwise, we get above trend line and then we'll end up trying to retrace the same move we already just made. Higher time frames, probably just two huge candles, and that is the session lows now. So we have not seen lower than this all day. It's our first time touching these lows. Looks like that's what's taking place as we speak. We're under that trend line. Can try for the sell stops under the wicks there and see if we get the push with stops above the candles. That would need to be a breakout trade. Otherwise, just stop us out. All the sell side movement, every sell opportunity has been selling off pretty fast. So we'd expect this to break away. If it doesn't break away, it's just going to come right back up and close candles above these wicks. While above the trend line, it was used to bounce. While under the trend line, it should be used to retest and drop. All right. So if we don't get that, then they're just playing the games and they could start the puttering motion that will give us the range and changing characteristics that could put a reversal on the table. We failed to drop a few times now. I'm down to bring in the stops to avoid the loss. So just break even those stops. We didn't want it to get back above that trend line, but we've already taken $200 losses there. So it wasn't like trying to looking for a third, but that was pretty nice. Dump through each levels. Probably would have been a fucking band from there. But we got that trend line we talked about earlier, where before it was like tap, tap, and we should see a fall. Otherwise, we'll get like this recovery above that trend line. So if we get the break, potentially try the impulse of it. Otherwise, all these retests should make us see another low. So we're failing that trend line. No full candle close on it just yet. We'd have to be with a stop here. We're anticipating the idea that we get above that trend line. Otherwise, again, sweep, sweep, retest, retest. We should be seeing a fast drop for the next leg down. I can potentially put 2 stops here, which could put us in the next drop if it gets down that low. We'll tap this into that. So we're going for the next leg down from what it looks like. Yeah, we don't want this thing flying all the way back up again either. So hopefully this momentum can keep on and we can swap over to a higher time frame. We got the nuke, we got the base here. So we know when it retests the base and doesn't fall, and then be back up to take the shares. All right, cool. Now let's put in the stops at break even. We got the full nuke, base, retest. Those are all the reasons why we should see even lower prices. Otherwise, take us out of the trade. Probably move stops above this wick here. Ultimate price target would be the order block, but we have a structure level down here at 21,995. Can't be mad at that. Let's lock in the 730s then. We got a pretty nice push into the close of the 4-hour. We're probably going to get the next 4-hour open to do the rest of that push. But that would be a $10,000 trade with 10 contracts. So we'll just keep it at that. If you've never heard of the VIX, when it's above 20, the market gets like this, where you get a bunch of this wick stuff, just naturally at all times of the day. The other side of that coin is as it's approaching 20, right? You can see here it's up 6%. The average is 3%. So if it's ever above 3% on the rising market, it still acts like this, right? So you'll get a lot of wicks. All the plays that you normally know and love require way more candles to actually run. Otherwise, most of the market just continues to sell off. So as VIX is increasing, it acts as if it's above 20, but it's not at 20, which means it can cool off. If it's above 20 and stays above 20, the market just moves like that at all times. You get a lot, sell-offs are easier, which feels like a bearish market. And then you also get a lot more wicks that take place when you're in consolidation. Today's our first day experiencing the VIX increase with that much volatility. Last time we saw it, it was only up 3%, so it wasn't that deep. Today, it was as high as 8 to 9%. And we see that we're kind of holding a median around 6% of it. So as that volatility is increasing, you can see just how the candles act, right, to a lot of the plays, which makes it pretty sketch to try to hold plays.